Hi everybody, this is AJ speaking. Today is August 1st. NIO just published July delivery numbers. You can see here total deliveries came in at 21,000 units. The NIO brand, this is the higher margin brand, came in at 12.7K. The Onvo brand came in at just under 6,000 units, and the NIO Firefly, it's the lowest cost brand NIO offers, came in at just under 2,400 units. In this statement, NIO brags about the year-on-year increase of 25%. We get to in a second why this is actually not that much, not that impressive at all. And then they put here the cumulative deliveries number reached, which is also irrelevant number. So let's look at this data breakdown. This shows you on a monthly basis deliveries split into the three brands that NIO offers. That it includes the NIO brand, the Onvo brand, and the Firefly brand. The Firefly brand was just launched in April. Onvo kicked off in October, so fairly new brands. You can see here 21,000 units were delivered in July, as I just mentioned. That's a 3% year-on-year increase. And down here you see for after the first 7 months of the year-on-year increase of 25%. That's also the number that NIO showed in the press release. But what NIO doesn't show you is the following. July was the first month of the third quarter. So what you should do in the auto industry, you should always compare relevant month, and in NIO's case that would be the July of last year. But also because there were significant changes in NIO's product lineup with the launch of two new brands, the first months of the prior quarter, so that's April. And when you look at April, NIO sold actually 12% more units. So sales came down quite a bit. And more alarmingly for every NIO investor, the high margin NIO brand came down from 19,300 units to 12,700 units in July. So a massive drop in this important product lineup. Then those sales were replaced by an increase in the Onvo brand, which increased from April at 4,400 units to 6,000 units in July. And the introduction of the low-cost Firefly brand, which started from effectively 0 units in April, added 2,400 units in July. So despite a brand new brand and the launch of another brand, Onvo, sales are down. And please keep in mind, this is despite NIO telling investors a very aggressive growth target of at least doubling year-on-year sales in 2025. And when you look down here, you see the full year total for the year 2024, it was 222,000 units. So that statement would imply over 440,000 units. And after the first 7 months, we are only at 135,000 units, up 25%. So this means NIO either generates a complete explosion in sales volume, or management will in a few months drastically cut down 2025 volume guidance. Given the latest trends we see in the various models, and I'm talking about vehicle models, and here we can quickly look at my modeling. This is an excerpt of my model. I have the vehicle data on a monthly basis for all the models. You can see the trend is really not that great. The NIO's products are losing sales left and right, and NIO can only kind of sustain the sales level partially by launching new products. For example, here was the launch of the ET9. So the bottom line is that NIO likely, yet again, I have to say, totally overpromised to basically keep the share price up. So the bottom line of the bottom line is, if you went long this stock, you're in for a tough time, and if you're short that stock, you're most likely going to profit from it. Again, not trading advice, make your own conclusions. Thanks for listening. See you next one. Bye.